There is one habit that silently destroys traders more than bad strategies, bad entries, or bad risk management. It's the habit most traders don't even realize they have. And it wipes out accounts slowly, quietly, and consistently. This habit is overtrading. Overtrading feels productive. It feels exciting. It feels like you're doing something meaningful. But in reality, it drains your focus, your discipline, your capital, and your confidence. Welcome back to Wealth Maama. This is video 4 of our Behavioral Finance and Money Psychology series. Today, we are going to understand why traders overtrade, what psychological forces drive this behavior, and how to break out of this cycle permanently. And friends, once you understand the psychology behind overtrading, your entire trading style will shift from chaos to clarity. Section 1. What overtrading really is. Most traders think overtrading simply means taking too many trades. That's only part of the truth. Overtrading is actually a psychological state, a mental condition where the brain prioritizes action over strategy. It's when you feel uncomfortable sitting idle. It's when you fear missing opportunities every minute. It's when silence feels dangerous and constant trading feels safe. Overtrading means you're trading out of emotional pressure instead of logical setups. This emotional pressure comes from boredom, fear, excitement, greed, impatience, or sometimes just the desire to do something when the market is open. And guys, this emotional pressure is what pushes traders to click buy and sell repeatedly, even when there is no valid reason. Section 2. Psychological reasons why traders overtrade. There are 5 deep psychological triggers that cause overtrading. 1. Action bias. Humans are wired to prefer action over inaction. Doing nothing feels wrong, lazy, or unproductive. But in trading, doing nothing is often the most profitable action. Your brain wants movement. Your strategy wants patience. These two conflict directly. 2. Dopamine addiction. Every trade, win or lose, releases dopamine. Dopamine is the chemical that makes you feel rewarded. This means placing trades becomes addictive. Even losing traders feel dopamine when they enter trades because the excitement itself becomes the reward. 3. Fear of missing out. FOMO doesn't only cause late entries. It also causes unnecessary entries. If you see a candle move, you feel pressure to act. If you see volume spike, you feel like you must participate. The brain hates watching opportunities pass by, even if the opportunity is not real. 4. Illusion of control. When the market moves without you, you feel helpless. So traders overtrade because clicking buttons creates a false sense of control. It feels like you're influencing the market. But in reality, the market is influencing you. 5. Revenge against boredom. Boredom in trading is dangerous. Many traders enter pointless trades just to escape the feeling of waiting. Waiting is uncomfortable for the mind. But waiting is necessary for consistency. Friends, overtrading is not about charts. It's about psychology reacting to discomfort. Section 3. Symptoms of overtrading. How do you know if you're overtrading? Here are the most common signs. 1. Trading when there is no setup. Your rules don't align, but you enter anyway because you don't want to sit idle. 2. Taking 10, 15, or even 20 trades a day. High frequency with low conviction is a major red flag. 3. Forcing trades after missing a move. You see a rally you missed. Suddenly you enter a random stock just to feel involved. 4. Feeling anxious when not in a trade. If sitting on the sidelines feels uncomfortable, your brain is addicted to action. 5. Shrinking attention span. When you overtrade, your focus drops. You stop reading setups deeply and start reacting to every small tick. 6. Emotional exhaustion by midday. Overtrading drains mental energy faster than anything else. You feel tired, irritated, or frustrated even before the day ends. Guys, these symptoms are clear signs that you're trading to feel something, not to make money. Section 4. Real story of an overtrader. I once knew a trader who took around 22 trades in a single day. He was exhausted, frustrated, and confused by the end of the session. His P&L? He ended the day at nearly break-even. But he felt mentally destroyed. Why? Because he wasn't trading based on setups. He was trading based on emotional impulses. He told me, I feel like if I don't trade enough, I won't find opportunities. But the truth is, overtrading doesn't help find opportunities. It destroys the ones you do find. And friends, when I looked at his trades, only 3 out of 22 were actually valid setups. The rest were emotional entries, boredom entries, or FOMO entries. Section 5. The damage overtrading causes. Overtrading doesn't just hurt your P&L. It damages your psychology. 1. Emotional fatigue. Too many decisions in a short time lead to decision burnout. 2. Loss of discipline. You start breaking rules without realizing. 3. Increased losses. More trades leads to more risk, more mistakes and less clarity. 4. Reduced confidence. Your self-belief drops because you keep disappointing yourself. 5. Slower progress. You stop improving because your mind is busy reacting instead of analyzing. Friends, overtrading is like running on a treadmill. A lot of movement but no progress. Section 6. Solutions. How to stop overtrading. Here are some powerful techniques to break the habit of overtrading. 1. The 3-trade rule. Limit yourself to 3 high-quality trades per day. If all 3 are done, you are done. 2. Predefined entry checklist. Only take trades that pass your checklist. If any point fails, skip the trade. 3. The no-trade zone technique. Schedule fixed times during the day when you will not trade. This reduces impulse entries. 4. Setups-only trading. If the chart doesn't match your strategy, you don't touch it. No exceptions. 5. End-of-day review. Review every trade at night. You'll immediately see which ones were emotional and which ones were valid. Guys, when you start valuing quality over quantity, your trading transforms. Overtrading is not a problem of strategy. It's a problem of emotional discomfort and psychological reactions. When you learn how to sit still, how to wait patiently, how to take fewer but higher quality trades, you shift from chaotic trading to controlled trading. This was video 4 of our behavioral finance and money psychology series. If you're going to break the overtrading, do like, subscribe and share the video. Because in the next video, we are going to talk about a dangerous psychological trap. Greed trap. Why traders hold losing trades too long. Let's continue building your mindset together.